Welcome to The Explainer. Today, we are diving into a huge forecast for the start of 2026. The source material is calling this moment a critical inflection point for global markets, a period of massive change they've dubbed the Great Realignment.
Okay, so let's get right into it. The core message here is pretty simple. The old rules for investing, they just don't apply anymore. You know that familiar playbook, the classic 60-40 portfolio, right? 60% stocks, 40% bonds? Well, that and all our old assumptions about how things are supposed to work are being seriously challenged by a whole new set of global forces.
And it's not just one thing. The big picture is that we've got several massive trends all coming to a head at the same time. We're talking about inflation that just won't go away, geopolitical alliances shifting all over the place, and of course the insane acceleration of artificial intelligence into, well, everything. It's not just one factor. It's the whole shebang, and it's happening right now.
And wow, this calendar really just lays it all out, doesn't it? This is a high-stakes environment. Just look at the first quarter. You've got huge decisions on trade, interest rates, and industrial policy all crammed into just a few months. Any one of these events could send shockwaves across the entire market.
So let's dig into our first major force, how geopolitics is rewriting the rules. We're going to see how policy is fueling volatility, because as the source makes crystal clear, this isn't just background noise anymore. A lot of the time, it's the main thing driving the markets. So the first big concept here is this shift in U.S. policy toward what's being called governance by executive action. Basically, instead of those long, drawn-out treaties, we're in a much more deal-by-deal world. Tariffs and trade restrictions can be put in place fast, which creates this constant state of uncertainty for global supply chains. And then you've got this Donroe Doctrine, adding another layer of tension. You can think of it like a 21st century update to the old Monroe Doctrine from a couple hundred years ago, but instead of just keeping foreign powers out, it's actively using economic and military pressure to lock down resources, especially critical minerals like copper and lithium in places like South America. And that directly impacts the supply of some of the most important commodities we're about to talk about. Okay, so with that really volatile political backdrop, how are investors reacting? Well, the source points to a hard asset renaissance. People are flocking back to the oldest forms of money on the planet: gold, silver, and platinum, not just as some temporary fad, but as a core part of their strategy for this new era. I mean, gold has already had a spectacular run, blasting past $4,500 an ounce. The huge shift here is that it's not just for doomsday preppers anymore. It's now being seen as a primary pillar for major institutional portfolios, a core holding you have to have against systemic risk. Now, what's really fascinating about this is the incredible consensus among the big banks. We're seeing price targets all gathering around that $5,000 mark, with the average even higher. So this isn't some fringe opinion. This is Wall Street pretty much screaming that gold's rally has a lot more room to run.
And the crucial point to understand is that this isn't just blind speculation. It's all being driven by some powerful, fundamental forces. You have central banks buying over 1,000 tons a year, a clear move away from the US dollar. At the exact same time, it's getting harder and more expensive to pull gold out of the ground. It's a classic supply and demand squeeze, and it's being supercharged by all this geopolitical hedging. Right behind gold, but with even more explosive potential, is silver. Traders call it a high beta play, which basically means it takes whatever gold is doing and puts it on steroids. But what's really cool about silver is its dual identity. It's not just money, it's also a critical industrial metal for things like solar panels and batteries. So it sits right at the intersection of investment demand and the green energy transition. All right, let's switch gears a bit from the monetary metals to the industrial metals that are literally building our future. Because, while gold is your hedge against instability, these metals are a direct bet on technological progress. For decades, we've called copper Dr. Copper, right? Because it was so good at telling us about the health of the global economy. Well, its role is fundamentally changing. It's not just a barometer anymore, it's quickly becoming the engine itself. And the answer to that question is artificial intelligence. The absolutely massive amount of electricity and cooling that AI data centers need has created this huge long-term demand for copper that it didn't exist at this scale a few years ago. Just look at this breakdown. Data centers are now the single biggest new source of demand, even bigger than EVs and renewables. Now for our fourth and final force, the evolution of digital assets. We're moving way beyond the early hype cycles and into what the source is calling the institutional era. This is where these assets are finally taking a serious seat at the big kids' table.
Bitcoin's story in 2026 is all about transformation. It's gone from this niche thing for individuals to a recognized asset class. The approval of those spot ETFs, well, that was the real turning point. It opened the floodgates for traditional money. I mean, we saw a staggering $760 million flow into these products in a single day this past January. It's now being treated as digital gold. Ethereum, on the other hand, is at this fascinating fork in the road. On one side, you've got these powerful network upgrades coming that are going to massively increase what it can do. But on the other side, you have the success of these helper networks. You might hear them called layer 2s, which are built on top of Ethereum to make things faster and cheaper. And that incredible innovation actually raises new questions about how much of that value will flow back to the core Ethereum token itself. It's a really interesting puzzle. So we've laid out all these huge forces that are reshaping the world. The big question is, how are we supposed to navigate all this? Well, it all comes down to a new playbook, a strategy that's designed for this new reality. And wow, this is a major departure from the old 60-40 model. Just look at these allocations. You've got 25% in precious metals and another 20% in digital assets. That's nearly half the portfolio, 45%, in assets designed to protect against inflation and political risk. And even industrial metals get a heavy 15% slice. So at the end of the day, the crucial point is to build a foundation that's resilient. You anchor your portfolio with hard assets like gold. You invest in the physical nuts and bolts of AI and electrification through copper. And you fully embrace the institutional era of digital assets by treating Bitcoin like the scarce digital commodity it is. It's a multi-pronged strategy for a multipolar world. So this explainer has really mapped out the new reality for Q1 2026, a world where politics, technology, and finance are all colliding in ways we've never seen before. It leaves us with one final thought to chew on. As these powerful trends speed up, is your strategy still built for the world we used to have? Or is it ready for the one that's right in front of us?